Mutual funds are financial instruments that aggregate the funds of numerous participants to purchase a diverse portfolio of stocks, bonds, and other securities. They give people the chance to invest in a variety of assets without having to handle those assets directly themselves. Here is a closer examination of mutual funds and their operation. Professional fund managers or investment companies administer mutual funds. You essentially purchase shares or units of a mutual fund when you invest in one. The value of these shares or net asset value (NAV) varies according to how well the underlying securities held by the fund are performing. The NAV rises as the value of the fund's holdings rises and vice versa. One of the main advantages of mutual funds is diversification. A mutual fund spreads risk among several securities, market and sectors since it holds a variety of assets. This lessens the impact of any particular security's subpar performance. Investors who might lack the resources or expertise to build up diverse portfolio on their own can benefit most from diversification. Mutual funds come in a variety of forms to accommodate variety investing objectives. Equity funds. These funds invest largely in stocks with the goal of capital growth. To accommodate various risk appetites, they can concentrate on particular sectors, industries, or geographical locations. Bond funds. Bond funds buy fixed income instruments such as corporate or government bonds. In comparison to equity funds, they are typically thought to be lower risk and offer consistent interest income. Balanced or hybrid funds. These funds mix equities and bonds in an effort to strike a balance between income generating and growth potential. Depending on the fund's goal, different amounts of money are invested in equities and bonds. The goal of index funds such as the S&P 500 is to mimic the performance of a certain market index. In comparison to actively managed funds, they frequently have cheaper fees and provide broad market exposure. Funds that are focused on a particular industry such as technology, healthcare, or energy are known as sector-specific funds. They offer specialized exposure to specific industries to investors. International funds. By investing in securities from other markets, these funds give investors access to possibilities around the world. The accessibility of mutual fund is a noteworthy benefit. They accept a wide variety of investors, both novice and expert. They also provide liquidity, enabling buyers and sellers of shares to do so on the majority of business days at the fund's current NAV. In conclusion, mutual funds offer investors a practical option to access diversified portfolios run by experts. They provide a variety of investment strategies, making them appropriate for diverse risk profiles and monetary objectives. Before making an investment, it's crucial to do your homework on funds, understand their goals, and take into account things like fees.